This is Nightly Business Report with Tyler Matheson and Sue Herrera. Funded in part by...
All it takes is a spark. One idea to take flight. The courage to seek the unknown. To innovate, disrupt, to move us all forward. To explore a different perspective. At NASDAQ, we connect the world. Its ideas, its capital, its businesses, the people that drive global economies. The future isn't tomorrow, it's right now. All it takes is a spark. NASDAQ.
Hiring surge. The private sector added nearly 300,000 jobs in February, shattering expectations and raising the stakes for the Federal Reserve.
Digging in, details tonight on a new report accusing Caterpillar of carrying out deliberate tax fraud to prop up its stock price.
Plugging in, how Tesla's battery packs are generating power for the island of Kauai. Those stories and more tonight on Nightly Business Report for Wednesday, March 8th.
Good evening, everyone, and welcome. A blowout month for private sector job creation. The nation's employers went on a hiring spree in February, beefing up payrolls by a lot more than expected. Private payroll processor ADP says 298,000 jobs were added last month. The estimate was for 188,000. That makes February the third best month for job growth since the recovery began back in 2009. And now, as Steve Leisman reports, the bar is high for the Labor Department's employment report due out Friday and, of course, next week's meeting of Federal Reserve policymakers.
Is the jobs market getting a Trump bump? Jobs look to be getting stronger, and economists are trying to figure out whether it's a temporary blip or a new trend that means more growth and maybe faster interest rate increases. The payroll company ADP reported today it expects private payrolls to rise by 298,000 in February. Its much-followed estimate for the government jobs report on Friday was more than 100,000 higher than what Wall Street had estimated.
It's a big number. It's 3 times the rate of job growth necessary to absorb the growth in the working age population. So, any slack in the labor market, it's being absorbed very rapidly.
If the strong growth is confirmed on Friday, it will mark a reversal of the slowing trend from earlier in the year. And it comes when claims for jobless insurance have been running at levels not seen since the early 1970s. It raises the question, is confidence brought on by the expected policies of the Trump administration already showing up in hiring?
I do think businesses are anticipating a lot of good stuff, tax cuts, less regulation. The bottom line is the economy is fundamentally strong. It was fundamentally strong before the election. It's fundamentally strong after the election.
Now, another factor, warm February weather, leading to lots of construction hiring and jobs in leisure and hospitality. And it looks like for the first time in a while, global growth is helping, not hurting U.S. growth. For some on Wall Street, it means the Fed is going to have to get more aggressive.
You have inflation contributing, you have jobs contributing, and then you also have the potential of what's going to happen here domestically regarding any policies that the Trump presidency puts in place.
What that means, if job growth stays strong, the Fed may be raising interest rates as many as 4 times this year, or a full percentage point, double what the market was looking for in January. For Nightly Business Report, I'm Steve Leisman.
With the increasing likelihood of a Fed interest rate hike and concerns that this bull market may be getting a little long in the tooth, what should you do to protect your retirement savings? Reed Fresa, financial planner at Highland Financial Advisors, is here with us to talk about that. Good to see you again, Reed.
Thank you, Sue. Tyler, nice to see you.
Good to see
You've
you.
been one who has been expecting higher rates for some time now. We're finally beginning to get a little inkling of it. But does the possible move by the Fed to raise rates, does that translate to higher interest rates in the market itself?
Not necessarily. We've been expecting rates to increase for a while. It's a natural course of events for the economy. No relationship, though, between this. So we've seen the federal overnight target rate about 0% for many years.
Right.
In 2013, without any movement in that rate, we saw about 100 basis point or 1% increase in 10-year treasuries. Likewise, after the election, we saw about an 80 basis point, about 0.8% increase in 10-year treasuries without any change in the federal funds rate. And then in mid-December, we saw the federal funds rate go up and really no reaction from the bond market.
Right.
So what do you expect? So the Fed may not be influencing the marketplace rates for bonds, but what do you expect the market to do to those rates? And if I'm a saver and an investor and I've got bond funds, What should I be doing now?
Well, first of all, we're big proponent of using bond funds to counter the risk of stocks. So in a balanced type portfolio, that's a natural function. When people are concerned about stocks, they fly to quality. Quality are going to be what we say is a sweet spot of bonds, is the 3 to 5 year duration bond, high quality government, AAA rated. That's where the money goes.
Or a fund that invests in those.
Yes, better off being funded in those at all times, knowing full well that if interest rates go up, and they will eventually, they get a slight effect of that, little risk there with interest rates.
You know, a lot of people who are nearing retirement, the old formula was that you moved out of a large equity position, pared it down, and moved into fixed income. But you've made the argument that with interest rates as low as they've been, perhaps that old formula needs to be revisited. So if you're getting closer to retirement in this market environment, what would you recommend people do?
So we think it's an antiquated solution to depend on fixed income for your lifestyle. People are living longer today. Although inflation's been low, inflation's a real thing. So the only thing that's going to help you keep pace with rising income is to have exposure to stocks. So again, a balanced type portfolio with high quality bonds. As the stocks go up over time, what we recommend people to do is to find out the income you need, segregate that amount of money for, say, 2 years worth of income, keep that in a reserve account, keep your portfolio invested. So depend on a liquid cash account to pay your income. We call it income distribution planning, using a reserve account, because a balanced portfolio has never taken more than 2 years to recover.
Quickly, this has been a really brutal time for savers. Do you expect savings rates to go up in any meaningful way on CDs and bank accounts?
They will eventually. They lag. So the federal overnight rate is going to go up in time because they're going to use it to manage the economy. You know, they have the job mandate and the inflation mandate. Eventually, those will start affecting short and intermediate term rates. Banks are they're the last to lag in that. So we'll probably see our mortgage rates go up a little bit before we see our CD rates go up.
They'll charge you more before they pay you more.
That's right.
That's right. Exactly.
Reed,
thank you.
Thank you.
Reed Fresa with Highland Financial Advisors.
All right, on Wall Street, the strong report on jobs was not enough to lift the market. It was pulled lower by energy shares, oil prices declining sharply after a new report showed that production cuts by OPEC and other exporters have not been enough to reduce supplies. Inventories up. Dow Jones Industrial Average down 69 points, finishing at 20,855. NASDAQ did get a gain in today of about 3 points, 0.06%. You're not going to get rich on that. The S&P 500 lost 5. Now, let's talk about crude. Worst day for oil in more than a year. It was off 5.4%.
A tough day for Caterpillar. Shares fell after a report accused the Dow component of tax and accounting fraud. The report was published by the New York Times, and it comes just days after law enforcement officials raided the headquarters of the Fortune 100 company. The stock was the worst performer on the blue chip Dow index. Morgan Brennan has more on Caterpillar's latest twist and turn.
The New York Times reviewed the report, which has not yet been made public, and says it was commissioned by the U.S. government, which has been investigating Caterpillar's activities tied to a Swiss subsidiary for several years. The author of the report, Leslie Robinson, an accounting professor at Dartmouth's Tuck School of Business, concluded, quote, Caterpillar did not comply with either U.S. tax law or U.S. financial reporting rules, adding, quote, I believe that the company's noncompliance with these rules was deliberate and primarily with the intention of maintaining a higher share price. These actions were fraudulent rather than negligent. They're strong words, and as the Times points out, ones rarely used to describe major multinational companies.
When you bring the money back to the U.S., you're supposed to pay tax on it with a credit for whatever you've already paid overseas. And the professor's analysis, in her view, Caterpillar has been bringing billions of dollars back to the U.S. without paying tax and without accounting for it for tax purposes in its financials, even though it didn't have the ability to do that based on her analysis of what was going on offshore. So the bottom line is that her position is that the company owed billions of dollars in tax on money brought back to the U.S. and didn't pay for it and didn't account for it.
No charges have been filed. It's unclear whether the government agrees with the findings or even intends to act upon them. For its part, Caterpillar has yet to comment, telling the Times it hadn't yet seen the report itself. Though just last night, Caterpillar CEO Jim Umpleby reiterated the company's stance on the investigation.
We were surprised by the actions of last week because, in fact, we have been cooperating with authorities, and we are cooperating, and we look forward to a resolution of these matters. We're Caterpillar. We've been in business for almost 100 years. We're an honorable company. We live by a code of conduct and a set of core values. If something appears to violate that code, we take appropriate action.
And it all begs the question, what will happen next? Will Caterpillar ultimately have to pay a penalty? And what will all of this mean for the stock? For Nightly Business Report, I'm Morgan Brennan in New York City.
Rebuilding our nation's infrastructure, one of the topics of conversations today in the nation's capital. The president met with a number of business leaders to discuss the need to increase spending on roads, bridges, and airports. Ilan Mui reports tonight from the White House.
The president held a working lunch with business leaders today to discuss infrastructure investment. He's got a $1 trillion plan to improve America's roads and bridges. And among the attendees today was Elon Musk, CEO of SpaceX and Tesla, also real estate developers Stephen Roth and Richard Lefrak, and a representative from the environmental advocacy group Nature Conservancy. The meeting was closed press, but Sean Spicer did give some details about how it went during his White House press briefing.
The government has wasted too much of the taxpayers' money on inefficient and misguided projects.
Spicer talked about the importance of rolling back regulations, but one big unanswered question is how to pay for all of this. Now, there's plenty of money waiting in the wings. According to PitchBook, there are 69 infrastructure funds already set up. Two of the biggest are run by global infrastructure partners. They have a fund that's worth $15.8 billion and another one that's worth about $8 billion. So lots of potential money there to go into these public-private partnerships that are a cornerstone of President Trump's infrastructure proposal. Now, there is also pushback, however, from Capitol Hill. Some conservatives are worried about the impact of these public-private partnerships on their communities. I talked to Senator John Barrasso of Wyoming, and he's worried that rural neighborhoods will get left behind in this proposal. And Senator Marco Rubio of Florida told me that he's concerned that this proposal could, quote, explode the debt. So everyone is in favor of improving America's infrastructure, but no one can agree on how to pay for it. For Nightly Business Report, I'm Ilan Mui in Washington.
Still ahead, jobs at risk, why a number of lawmakers are urging the president to take a tough stand with one airline. The productivity of the American workforce recorded its smallest annual gain since 2011. It comes despite a recent pickup in manufacturing activity. For all of 2016, productivity, which measures output per hour work, eked out just a 0.2% increase, the smallest in 5 years. Now, economists are struggling to understand the reason for the slowdown in productivity gains, which are considered important for economic prosperity because, in theory, when workers are more productive, employers can afford to pay them more.
Weak mall traffic, dense results at Express, and that is where we begin tonight's market focus. The apparel chain also said discounts contributed to the company's lower profit and revenue. Despite the decline, sales still beat estimates while profit was in line, but same-store sales did not impress. They fell more than expected. Express says planned product launches and the reintroduction of the customer loyalty program will help drive future results. Shares down 10% at $9.51. On the other hand, Children's Place reported a higher than expected profit and doubled its quarterly dividend to 40 cents a share. The kids apparel company's revenue missed street targets, but same-store sales were better than expected. The company also sees full-year earnings ahead of estimates, shares spiking more than 18% to $118.15. Bob Evans Farms missed estimates, but the food distributor said it gained market share in key product categories. The company, which is selling its Bob Evans restaurant business, sees strength ahead and raised its earnings outlook for the full year. Shares up 3% to $58.59.
MGP Ingredients, which is a supplier of premium distilled spirits, posted a better than expected fourth quarter. The company said stronger demand of premium alcohol offset a sales drop of lower margin industrial alcohol. Shares were up 10% to $49.16. Despite swinging to a profit in the latest quarter, networking company Ciena missed expectations. The network technology company also said revenue grew, but it wasn't at the pace that analysts were expecting. Ciena shares fell more than 8% to $23.97. And Camping World said strong demand for recreational vehicles drove its latest results. The company earnings and revenue rose, but only profit was good enough to top expectations. After hours, the shares dipped initially following the news, but they ended the regular session a fraction higher to $35.49.
Politicians from New York and New Jersey are calling on President Trump to stop Gulf-based Emirates airline from starting a round-trip flight between Newark, New Jersey and Athens, Greece this month. In a letter released late Tuesday, the group contends that Emirates and other Gulf airlines have an unfair advantage over American air carriers because they receive billions in government subsidies. Subsidies they say are costing Americans jobs. Congressman Donald Payne Jr.'s signature is on that letter, and he joins us now. Congressman, welcome. Good to have you with us.
Well, thank you for having me.
I assume lots of airlines get some form of government subsidy or another, and it's not new news that Emirates may or may not get those subsidies. Sue's going to follow up with that in just a minute. But why now? Why are you objecting to this one if Emirates has been doing business? I flew them from New York to Milan 2 years ago.
Well, you know, it really is a serious issue for us. I have Newark Airport in my district, and we feel it is unfair competition that they are subsidized to the extent that they are. $50 billion is quite a subsidy, and it really gives an unfair access for Emirates in taking this flight from Athens to Newark.
Congressman, on the Emirates website, they basically made a statement disputing your claims and saying that the thought that they are receiving subsidies is patently false, their words. They say what U.S. legacy carriers really want is protection from competition. What do you say to that?
Well, now we're actually trying to make sure that there is competition. As we stated, these subsidies are dramatic. It gives them an unfair advantage, and that's what we're trying to stop.
Even though they deny it?
Even though they deny it. They can deny it, but I mean, you know, the facts are the facts. They are subsidized to this degree, and it causes unfair competition. And what it does for us really back here, you know, for every flight of that distance that we lose an American carrier impacts 1,500 jobs. And so that's very serious. And we're going to do everything we can to make sure that we have a fair playing field for our carriers throughout the globe.
We have an open skies agreement with the UAE. How does that figure into this, number one? Number two, have you looked at the price differential between what Emirates proposes to charge on these flights, which I think begin maybe even this weekend, and what a U.S. carrier flying the same route would charge?
I don't have the exact cost, but I know it's not competitive, and it goes back to, once again, them being subsidized. So it just continues to harken back to that one point. But we are going to be at Newark Airport this Sunday to show our support for our American carriers. Several members of the New Jersey and New York delegation will be there Sunday. And we're going to continue to fight this issue because it's very important to jobs and the GDP of this country.
Congressman Payne, thank you very much. Congressman Donald Payne Jr. of New Jersey. And coming up, Tesla's solar farm in paradise.
Is this giant solar farm and energy storage the key to cutting utility costs here in Hawaii? I'm Phil LeBeau. That story coming up on the Nightly Business Report.
And here's a look at what to watch tomorrow. The bull market turns 8. making it the second longest aged bull in history. The American Society of Civil Engineers will release its report card on America's infrastructure and its estimate on how much money is needed to maintain our roads and bridges. And jobless claims are going to be released. The final piece of jobs data before the monthly employment report will be released Friday. That's what to watch Thursday.
The state of Hawaii is the first to challenge the president's new immigration order. Attorneys are asking a federal judge to issue a temporary restraining order blocking the order's implementation. President Trump signed the action Monday. It bans foreign nationals from 6 Muslim-majority countries from entering the U.S. for 90 days and bans all refugees for 120 days.
In Hawaii, the electric car maker Tesla is powering up its plans for energy storage. In fact, its industrial battery packs are now helping a utility in Hawaii generate enough electricity for an entire island. Phil LeBeau traveled to the island of Kauai for our story.
As energy projects go, Kauai may be the perfect lab. Just over 70,000 residents and a utility trying to end its use of diesel generators when the island is not basking in the sun.
This project is a prime example of being able to generate energy from clean solar and being able to deliver it at night when the consumer wants it.
Tesla says its power packs are cheaper to use than diesel generators, and that ultimately will cut power generation costs on this island. The key to Tesla's program here in Kauai, this huge solar farm, nearly 55,000 solar panels spread over 50 acres, generating electricity that will be stored in 272 Tesla power packs. Those power packs are discharging electricity used by Kauai's utility company.
We're able to show that we can directly absorb solar power throughout the day into these batteries and then discharge it back at night and stabilize it, even though we might have clouds coming over or even though it might not line up directly with when people want to use the energy. This can solve that problem.
Tesla's Gigafactory, where the company makes electric batteries for its cars and industrial power packs for utilities, is at the heart of CEO Elon Musk's vision for sustainable energy, including the company's acquisition of Solar City. But analysts aren't sure Tesla's growth in clean energy projects like Kauai will move the needle compared to Tesla's rapidly growing auto business.
Even bull cases for Tesla Energy and utility storage, for example, might be worth 2 or 6% of the value of the company. It's kind of partially because the company's so valuable already and because the automotive opportunity, just by comparison, just dwarfs energy in our opinion.
J.B. Straubel disagrees.
I do think he's wrong, but we see a huge potential in this, and we think the chance for growing the sales and growing the number of projects we're doing here is incredible. We're just at the beginning of deploying storage and solar as well in mass numbers.
Storing solar energy to power an island, and the growth of a company betting on utilities going green. Phil LeBeau, Nightly Business Report, Lahui, Hawaii.
Today is being promoted as a day without a woman. Rallies took place across the country to bring attention to the economic power that women hold. Here are some numbers for you. Women account for 47% of all U.S. workers. They earn 79 cents for every $1 made by men on average, and only 4% of Fortune 500 companies have a female CEO. On that note, that's Nightly Business Report for tonight. I'm Sue Herrera. Thanks for joining us. We want to remind you this is the time of year your public television station seeks your support.
And we appreciate that support. I'm Tyler Matheson. Thanks again for helping us. Have a great evening, everybody. I wish it was the weekend.
Wish it was the weekend.
We'll see you tomorrow.
Nightly Business Report has been funded in part by...
All it takes is a spark. One idea to take flight. The courage to seek the unknown. To innovate, disrupt, to move us all forward, to explore a different perspective. At NASDAQ, we connect the world, its ideas, its capital, its businesses, the people that drive global economies. The future isn't tomorrow, it's right now. All it takes is a spark. NASDAQ.
I'm Tyler Matheson with a nightly business report news brief. The nation's employers went on a hiring spree in February as private payroll processor ADP said 298,000 jobs were added. The estimate was for a mere 188,000. The government's February employment report comes out Friday. On Wall Street, the strong jobs report was not enough to lift the market. Shares pulled lower by energy stocks as oil prices suffered their worst day in more than a year, following a report that showed OPEC cuts have not been able really meaningfully to reduce supply. The Dow down 69 to 20,855. NASDAQ up 3. S&P 500 lost 5. Productivity of the American workforce in 2016, smallest annual gain in 5 years, despite a recent pickup in manufacturing activity. Be sure to tune in to Nightly Business Report right here on your public television station.